Hello and welcome to this edition of Africa's Boardroom. I'm Stephen Gunnion. Now, until fairly recently, most conversations on emerging markets have been dominated by select countries like Brazil, Russia and India. However, after decades of poor performance, the African continent has finally worked its way into the global dialogue on economic opportunity. In this edition of the show, we take a closer look at Africa as a new frontier for economic growth. Joining me in studio for this discussion are Grant Hatch, he's Senior Executive for Strategy at ACCENTURE South Africa, Professor Albert Voka from Gibbs, and Nyagaka Ongeri, Head of Global Finance and Risk Solutions at ABSA Capital. Gents, thanks very much for coming in this evening. Grant, I'm going to start with you. Why Africa? What does it have to offer that other emerging markets and frontier markets don't?
Well, it's a very pertinent question, I think, and the back of your introduction. I think the focus has been for a long time on other big emerging markets, principally China and India. And I think Africa has been ignored often or has taken a back seat in that process. And what we've done is looked at the sort of key dimensions in Africa around growing consumerism, vast resources that are mineral resources that are essentially untapped in many cases, the sort of talent pool that exists in Africa, the capital and the increasing capital flows into Africa, and then lastly, scope for innovation. So really in each of those dimensions, there are a number of big differences between other emerging markets in Africa that offer incredible opportunity for companies that are prepared to enter the market.
Albert, is it true to say that Africa has been ignored though, because some companies and countries have been entering the continent by stealth almost? We know that China has its eye on Africa's resources as well. Do you think that they already have the first mover advantage?
Yes, absolutely, Stephen. I think that the second move is going to be a bit of a disadvantage. I don't know if we should actually be saying that they're the first mover advantage, because in the 1960s and the 1970s we saw a lot of firms based in particularly Europe coming in. But as elites have changed, as the dynamics in Africa have changed, a lot of them have lost a fair amount of credibility, but there are a lot that are pretty firm there, particularly on the consumer type markets. Now, from the resources point of view, I think we had what we would call maybe a dark ages when we saw a trend of nationalization of resources. Now, as the economies are opening up, as the middle classes are growing, as we're getting political stability, we are indeed seeing more companies finding Africa the place to be. Also, with the instability that you're seeing in other parts of the world, Africa is looking far more attractive.
Nyagaka, where are you seeing opportunities on the African continent at the moment?
It's predominantly, from our business perspective, it's predominantly in the natural resource space right now. But I think, as has been pointed out by Albert, we're starting to see increased interest beyond natural resources. So power and energy is a good example. And away from power and energy, financial services is another example where we are starting to see more and more foreign interest within Africa as well. I mean, one thing I would add to what Albert just said is that from an investor perspective, there's been a fundamental rethink about the risk-reward proposition of Africa. I think previously there was a thinking that Africa, from a risk-reward perspective, was fairly risky. But I think what people have now done from an investor perspective is look at the relative risk and the reward in conjunction.
Well, how do you weigh up the risk-reward, Grant, given that you're seeing very little reward elsewhere on the globe?
Yeah, absolutely. I mean, I think one of the sort of backdrops to us one has to look at this is the relative growth rates between developed economies that are struggling to get to kind of 3% projected growth rates, emerging Asia, which is at around 7%, and Africa, which is running at about 6% projected growth rates. And that's on the back of perceived higher returns. And if you look at returns from African stock markets, running much higher than other developed markets, around 65-70%. But it's got to be weighed, as been pointed out, with much higher risk. I do think what is happening, though, is a lot of that risk has been broadly applied across Africa. It's been seen as political instability, and I think that risk has been viewed differently. I mean, I think it's also driven by the fact that you've got in areas very good opportunities around resources, infrastructure, telecoms that are driving those higher returns. So there are definitely opportunities in Africa that are available for companies should they pursue them. It doesn't say that the risks aren't there, and there are major infrastructure, logistical issues that have got to be overcome in capitalizing on those opportunities.
And of course, some of the countries are riskier than others, Nyagaka. Is Africa tarnished with the same brush across the continent? Are we still being viewed like that, or are investors looking at countries on a country-by-country basis?
Yeah, I think investors have actually become a lot more sophisticated. And so there's a certain, I think, perspective in terms of really trying to understand the dynamics within each specific country as opposed to actually painting the continent with a broad brush. I think a very good example is what we've seen happen in Kenya in the course of the last week or so. Keep in mind that post the 2007 election violence in Kenya, there had been a lot of uncertainty as to where the country was actually going to and sort of what the end game would be. I think post the referendum last week, there's been a rethink about the broad general stability of the country as a whole, on the positive.
Albert, the growth rates we were chatting about just a few minutes ago, great growth rates, 6% plus. Are they sustainable going forward? Are we going to continue to see the same returns coming out of Africa?
I don't see any reason why not, because we're coming from a very, very low base. So these would be quite sustainable. And what's also feeding it is the incredible growth of the middle class and urbanization. So now we're beginning to get economies of scale in these cities, and that's feeding itself and starting to look very, very attractive.
Growth of the middle class, Grant, and do we have consumers out there with money in their pockets that can spend?
I think what's really interesting is often the view on the demographics of Africa is seen as a negative. You know, you've got nearly 1 billion people in Africa, you know, lower population than China or India, but within that, half of those people below the poverty line. But having said that, you've got a third that are in the middle class. And what's happening is you're getting an enormous growth in that middle class, driven by really growing GDP. You've got consumer spending growing it's growing at about 13% at the moment, GDP growing at around 8%. And so you are getting a lot of people moving from below the poverty level into a middle class. And obviously in that process, starting to demand more sophisticated consumer goods, from mobile phones to financial products.
And I think what people are forgetting is that, or would be surprised, there are 13 African countries with a higher per capita GDP than China. And people need to put that into context. Africa is not just a continent of poor people.
Nyagaka, if you wanted to tap into that aspiring middle class, what would you be doing?
Well, I think one of the most fundamental things that Africa as a continent should be thinking about is more regional blocks. We've seen the success of ECOWAS, we've seen the success of SADC. The East African community just went into formation, I think it was July 1 of this year as well. I think the ability to take all these disparate blocks of middle income and growing consumer classes and actually amalgamate it into one block, I think is what's needed.
Why do these economic blocks help the investment case?
Well, it helps the investment case purely from the perspective of economies of scale. If you're a company that's thinking about entering into West Africa or East Africa, it makes a lot more sense to be thinking about a consumer market. For example, in East Africa, that's 180 million people strong, as opposed to disparate countries that may be 30 to 40 million people strong as well.
Yeah. Is that something you're seeing, Grant?
No, I think what it also addresses is one of the problems Africa's had is because it's 53 countries, that there were a lot of barriers between countries that created obstacles to trade, and these sort of opening up of borders has had a huge impact in allowing companies to trade across borders. There's still issues around product differences and local regulation, but that's slowly disappearing or dissipating, which is making it a lot easier for companies to choose a hub within Africa and build a business in a region rather than focusing on a country. The other pattern that we've got to bear in mind about Africa is the incredible rate of urbanization that's taking place. So what you're getting is, within those regions, the development of city hubs as urbanization occurs. I mean, Africa's got the highest rate of urbanization in the world. I mean, we're going to see over the next sort of 30, 40 years, 150 million people moving into those cities. And that creates a huge change in the dynamics of those markets and regional consumerism linked to the key cities.
Well, you mentioned regulation. Sorry, Albert, you wanted to say something?
Yeah, just added to that, Africa's been driving this process informally for a really long time. For instance, you can catch a taxi to 13 international destinations from Johannesburg Park Station, 13 international destinations. So these hubs are already happening. If you go look at what's happening in Accra in Ghana, where you've got people coming in shopping over a weekend, going to the local mall, and then traveling back to their countries. There's 3 or 4 countries that are, or populations from 3 or 4 countries driving there, doing their shopping, driving back, and the block formation is happening. It's been happening for a while.
Nyagaka, regulations, to what extent are they a hindrance to investment on the continent? So of course, the regulations become less onerous with these regional blocks, but still there are different regulations.
Yeah, Steve, just before I answer your question, just to maybe add on to what Albert just said, it's not just having common regional blocks that's important, but it's also facilitating the free movement of people. I think there's been an anecdote that's been bandied around this year that it's easier for Europeans to travel from South Africa to Ghana than it is for an African to actually do so, simply because you'll need visa country after country after country. So movement of people is pretty key. But going back to your question about regulation, regulation is just fundamental to this. If you look, for example, simply at the financial markets, and you look at all the burgeoning financial markets that are taking place in half a dozen to a dozen African countries, what you're finding is that you're finding discrepancies in terms of the rate of growth, simply because some regulators have been more proactive about introducing streamlined regulations around insider trading, around the type of instruments that can actually be traded within these exchanges, capital that is allocated towards stockbrokers in these exchanges as well. All that is fundamentally important to creating this basic infrastructure of functioning capital markets.
And are we moving closer in lots of these regulations?
I think we are, but we do need impetus from regulators. I think there are some countries, again, that have been very, I'd say, proactive in this front. When you look at Nigeria and you look at, for example, what's happened in terms of the regulation of the banks and some of the changes that have taken place in the banking industry there in the last year or so, I think that's been a real positive. But I'd say overall, what I'd say is that more impetus is actually needed to create not just the regulations that facilitate good markets, but also to actually create some consistency across different countries as well.
What do you see as some of the obstacles and some of the risks, perhaps, for companies entering the continent?
Well, again, we've spoken about the opportunity from the consumer side and consumer growth. But again, as has been pointed out, you've got a very disparate set of countries. And because a lot of that market is still informal, 60% of many of the countries' markets are still informal, is how do you deal with an informal market that buys in a very different way, because cash is erratically available. So you suddenly find, for example, with consumer products, you've got to focus on small purchases when cash is not available and large purchases when you're buying in advance. So there's all those consumer dynamics to consider, but stepping up a level and you look at just the logistics from cross-border control posts and having to move through those, through to finding facilities. One of the big issues around Africa, which is improving but is still there, is the infrastructure. So electricity availability. So entering a country is not just about finding a location, it's actually providing the backup services. If it's electricity, I think about 6% of revenue in companies in Africa is lost just to electricity outages. And then just the distances and logistics required to serve that. The road infrastructure, those are barriers that are increasingly being addressed. But companies entering have to consider those.
And of course, there's no one-size-fits-all approach, is there, Albert?
Absolutely.
So you really have to look at that market you're entering and treat it separately from the market next door, perhaps.
To an extent, there are some similarities. There are some ways of doing business in Africa that work. Just ask any long-distance truck driver; he knows how to play and work the system. But local knowledge is key. Absolutely, local knowledge is key. For instance, if you're operating in Luanda, the most expensive city for any expatriate to live in on the planet, why is it the most expensive? Well, you don't have the local knowledge, you don't have the local connections. Those things still play a major role.